Hi, and welcome to the Stockscores Market Minutes for July 9th, 2012. This week's topic, the short-term time frame, how you can find opportunity in an otherwise slow market. Reminder to subscribe to my free weekly newsletter at stockscores.com/newsletters.asp. You know, there's times when it is hard to find good buying opportunities because the market is weak or just not trending. Well, if you shorten the chart time frame, you can actually find weak stocks on a daily chart that are showing bursts of buyer enthusiasm, providing a good trade for the person that can monitor the intraday chart. Trading the intraday time frame requires more time, but there will be better opportunities without sacrificing reward for the risk you take. Here's a chart that shows this. On the left, I have a daily chart of Patriot Coal, and you can see it's a pretty ugly chart in a steady downward trend. But last week it actually made a pretty good move from $1.50 to $2.60 in only 2 days. Now the entry signal came on the 3rd on a break from an ascending triangle, abnormal action out of low price volatility through resistance from optimism. All of the things that I like to see on a daily chart were shown here on the intraday chart, giving an entry signal at $1.50 for a good run higher over the following 2 days. Now the only thing that you had to do to find this was be able to look at the market early in the day to find those stocks that are moving quicker than the market, and in this case look for that good chart pattern breakout as was shown on July 5th. All right, let's get into the analysis. The S&P 500 is in a pattern that is a bit scary because we've got a divergence between the falling tops and the falling bottoms. So in general, there's pessimism there. We're trying to test that downward trend line, but if we fail to break that downward trend line, this market has a long way to fall to support at the lower boundary of that pattern. So I'm feeling like the market is probably going to hang in here, but I do exercise some caution because there is a good chance that we could break lower and really have quite a fall through the summer. So cautious right now on US stocks. The TSX 60 is also testing that downward trend line. We hit it last week and got stuck, and we still need to make that break through that downward trend line for this market to be positive. Now the upside is that we're pretty close to support as well, so there doesn't appear to be a lot of downside risk in the Canadian market, and that's a good thing. So I'm cautiously optimistic about the Canadian market, but ultimately we need to see that downward trend line broken before we can get bullish. A positive for the overall market is the state of the VIX, which is pushing toward new lows, and that is a sign that the market isn't too scared about something really terrible happening, particularly out of Europe. Now we know that the European economy is weak, but the market's more concerned about a big major event like Spain defaulting on its debt, Greece defaulting on its debt, Italy defaulting on its debt. Those sorts of questions would really cause a lot of turmoil in the market, and the VIX is telling us that those are not big issues. Now, just as we come out of a fairly weak chart on the VIX, which is a positive for stocks, we see here a pretty strong chart for the US Treasuries, and that is weak for stocks because it tells us that money is still hiding in low risk places, and that is a sign that really that money isn't coming back to the stock market. So that's a weak sign for the market. Although we don't have panic, we also don't see investors saying, hey, there's great opportunity in stocks right now. US dollar has had a pretty good rally. It is now at resistance. We shouldn't confuse the strength here with strength in the US economy. It's more a function of really supreme weakness over in Europe. The euro has really been moving lower, and that makes the US dollar more attractive. It's not a sign that there is good things happening in the US necessarily. It's just that the US is not as weak as other places in the world. Gold remains in that pessimistic long-term pattern. I remain bearish on gold, although it really needs to see that breakdown through support that I've drawn there at the 150 mark on the ETF, which is about $1,500 the ounce on gold. Oil has had a pretty good run over the last week, but we shouldn't confuse that with optimism. It's really bouncing back from very oversold conditions. And that is typical when a market sells off as sharply as it did. You can see how far the oil market is below the downward trend line. We bounced off of support, and I wouldn't be surprised if we see more of a bounce in oil, but that is not necessarily bullish for the global economy. Often oil as an indicator of the global economy will rise when expectations for an improving economy are there, but I don't think that's really what's going on here. I think this is just bouncing back from oversold conditions. So my ratings then, neutral on US and Canadian stocks, but with a lot of caution, particularly in the US market where we've got a long distance to fall to support. What is critical is how will earnings affect the overall market psychology. The upside is that there is still that potential for the US Federal Reserve to do some sort of quantitative easing round 3, and that would probably be what it takes to break the market through that downward trend line. Bearish on gold, as I've said. Neutral on oil. I do think in the short term it could rally, but if you think about the big term picture for oil, it is not yet a place to be. So the market this week will be focusing on earnings. We're into earnings season. Alcoa announced today as the first big company to announce. And there's always that hope of stimulus from the world central banks, the US being the biggest, of course, but the potential is there for something out of the ECB as well. Too much uncertainty in the market to be bullish right now. I think it's best to be very stock specific, focusing on alpha with a relatively short time horizon in the trades you take. Have a great week in the market and trade well.